leasing a car versus outright or hire purchase of a car. Now I'm going to specifically talk about electric cars because I've said a number of times before, the rule is if it's not electric, you don't want it in the business. You're going to be paying too much in a benefit in kind charge. So on electric cars, how do we structure that in the business? Well, the answer, not that I'm sitting on the fence, is that it depends. So the tax treatment is different. If you're buying an electric car outright, or you're hire purchasing, so you're sort of taking out some borrowing to buy that asset, then if that electric car is fully electric and new, the company will get 100% tax allowances on that in the year they buy it. So if your taxable profits are £50,000 and that electric car costs £50,000, that's going to change your taxable profits to zero, so you'll pay no tax. So it's a tax saving roughly, if you're going to pay tax at 20% on £50,000, that would be £10,000. It's a rough tax saving of £10,000. Once you've done that, there's no further allowances for that electric car year on year because you've used them all. And then what happens is when you sell that electric car, that would be taxable proceeds for the business. So if you sold it 4 years later for £10,000, that £10,000 would be taxable income for the business essentially. So the company would pay tax on that at that point. So over the life of the asset, you get the tax relief on the difference between what you buy it for and what you sell it for. Now most people, when they sell, they sort of part exchange and get another electric car, so the process starts again. So that's how that works. There's no VAT reclaimable if there's private use on a vehicle, on a vehicle like a car, so there's no VAT reclaimable. But with a lease, it's slightly different. So first of all, if there's private use, you can claim 50% of the VAT back. So that's quite an important consideration. The other thing, the way a lease works is from a tax point of view, is that the lease, you get tax relief on the lease costs in the year. So if your lease costs are 400 quid a month, it's going to be 4,800 quid a year that is going to reduce your taxable profits by. So you're getting tax relief sort of year on year rather than all at the outset. So which one is better? And I often say it does depend. You know, a lot of clients recently for me have been going down the leasing route because they've just got that assurance of what's going to happen. They're not convinced with the second-hand car market for a start. When you do all the calculations on it, there isn't much difference in it. So it's important to try and do